Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Matt Lipink, and in today's video, I'm going to talk about that many analysts are saying that the situation what we're witnessing right now can be similar what we have seen back in March in 2020, which could mean that at the end of the year, it still can be good. On the other hand, it's not totally the same. So let's discuss that. The second thing I would like to talk about that many CPI numbers are out now in the UK, out in Germany, out in the US. So when we're looking at the overall picture compared to the previous month, it's still looking worse. So it's not getting better in many cases. So inflation is on and it's still causing a problem, and this issue isn't fixed. Okay, and the third topic is that Covert Chinese Bitcoin miners still account for 21% of the network hash rate, which is crazy because you do know that Bitcoin mining in China is banned, but it looks like they're still working, and 21% is a significant number. Guys, all this in today's video. And if you would like to stay up to date, which is, I think, very important, then simply subscribe to this YouTube channel, Blockchain Bloom, because every single weekday I bring you the freshest cryptocurrency and blockchain news. And also hit the like button if you like this kind of content. Check out the links under this video because there are many useful ones. And now it's time to look at the market. And we can see that Bitcoin is just under 30,000, 29,886, not moving too far from this around 30s level. At the moment, 1.64% down. Ethereum around 2,000, 2,035. Also very similar number, 1%, 1.65 down. When we're looking at the winners, we see Kyber Network up 30%, and we see Clay 5%, Covex Finance 4%, and some very similar. Nothing major at all. And the losers, well, we still have here UST, this time going down 17%. Then we have Cadena, 10% down, and we have Maker, 7% down at the moment. And when we're looking at the candlestick chart, we can see that, yes, what the Bitcoin price is showing us, that this kind of 30,000 level, what we are witnessing right now, it's now still holding. We won't stay here forever, no question. But the direction, I think it's not 100% that we know for sure it's an up or it's a down, but we are in a downward trend. And I would like to talk about that many analysts are saying that the situation what we're witnessing right now is pretty similar what we have seen back in March in 2020. And let's talk about a couple of things. Is it similar or is it not? Do we have a nice recovery probably this year, or it will take longer to do so? So let's check that out. What is not a question that we are in a downward trend, and we had a significant drop on the stock market, but also, and we do know that it's because of the USD situation here on the crypto market. Therefore, it was a more significant one. And many analysts are saying that what we have seen now here is getting very similar to what we have witnessed in March 2020, if you remember how the market reacted on this pandemic situation. And, on the 12th of March 2020, investors panic sold many assets, including Bitcoin, as fear of how the market would be impacted by COVID-19 pandemic and global lockdowns. So on the day Bitcoin fell, 45%. So from that time, far away from its all-time high, which was 20,000, from 7,935 to down to 5,142, or at some numbers even some places have shown even lower numbers. The current decline in traditional markets has led to loss of 7.6 trillion in the market cap from the tech-heavy Nasdaq. So if you look at that, in non-inflation adjusted terms more than the dot-com bubble in March 2020 sell-offs. So look at here, interesting number, but please note that this inflation is not included in this, and we do know how significant that is. But look, dot-com bubble, when we're looking at NASDAQ, it was 4.6 trillion down. Then we had the global finance crisis, back then it was 2.3. The COVID sell-off 4.4, and now the current decline is 7.6. So you can see how significant it is already, but please remember inflation, it's not included in this one, so therefore the numbers are also then bigger. So the crypto fear index, fear and greed, was at extreme fear at 8 yesterday. So we haven't seen that one for a long time, the lowest since March 2020. So basically, it's in that case, it's also very similar what we had back then. And therefore, many people believe that after a significant drop, just what the pandemic caused, or what now the UST crash and Terra Luna crash caused on the market, we can have a nice recovery from here. And well, this is like NASDAQ. When you're looking at NASDAQ, how similar it behaves, and when you're looking at Bitcoin, these are two very similar. Here on Ryan's Detrick Twitter post, he collected, since 1980, that there have been 24 corrections on S&P 500. And these corrections, in average, were between 10 and 20%. And what is very important, his point was that actually a year return after lows or 2 year return after lows, and you can see that every single time we witnessing here in a year time or in 2 years time double digits, which is great, by the way. But one important point is that when you're looking at 2000 and 2008. So we do know that two significant drops, and when bear market started, then in 1 year later, actually this was even lower, and even in 2 years, the returns weren't that beautiful. So when we're looking at the present situation, which in some cases are even worse, I mean, this pre-crisis situation, put it this way, if we're going to witness that one, what we have witnessed actually before. And therefore, I think we have to be very careful, because many indicators, every single day I can name a new indicator which shows why we have bottomed. And yes, it can happen. But you also have to bear in mind that we could see even lower numbers on the stock market and lower numbers in Bitcoin, and therefore on the whole crypto market. So right now we are on the situation that, well, we are at the 30,000, but was really the deep point, the lowest point, this kind of 25,000 something, what we have just witnessed here on the 12th of May, or we can go down to these numbers and actually go further down. And this is right now, it's a very difficult question, because even you're looking at those indicators, they show the bottom, they don't calculate the present situation, what we have in the economy and with the inflation. And this will be my next topic, moving on to inflation, what kind of numbers we have witnessed already, not just in the US, but in some big economies around the world, at some of them. And another important thing is that how you manage the situation. It's not financial wise, but for many people, especially when the numbers are low, is DCA. And this Bitcoin address belongs to the third biggest Bitcoin whale. And how interesting it is that, look, the purchase, what this whale was made, for instance, it was a sell, not a purchase, a sell. Yesterday on the 17th, sold 1,500 Bitcoin, and then bought it back a day later on a higher price. And when you're looking at this whale, it's usually not selling a lot. It's accumulating, it's buying. Of course, there are periods when this whale is selling. So, for instance, when you go back here to, let me see, like, bye. Look, this was exactly the time, the 10th of November, when the price started to fall, and this whale just sold 1,500 Bitcoin on the 9th, kind of day before when this whole panic started, or around that. So you can see that mostly buying, and there was a sell, and now a significant buy, because here sometimes it's a lot, but like, you know, compared to his numbers, sometimes 60 something Bitcoins, sometimes here 61 Bitcoin, 16. So not always these major numbers, but yesterday it was a big sale and then a big buy, and he actually bought it back. When you're looking at here the average price, you can see it here on a higher price, which if you're looking at this amount, it makes a huge difference. So anyway, here you can see perfectly how whale is doing this kind of DCA strategy. And you know, this is the blue line is how much Bitcoin, how many Bitcoin this whoever is behind this address has, and also here is the value in US dollars. And you can see that there are definitely periods when you know, when his portfolio is lower than the previous times, whatever, you know, you name it, just for instance, just like in November last year. But on the other hand, if you're looking at the big picture, then actually the number pretty much goes up. But this means a continuous accumulation and thinking in long term. And definitely there are some sell-offs, some significant ones. It's always around 1,500, 3,000 Bitcoin. Crazy things what's happening here. But then we have a lot of buy orders as well, as you can see. And of course, it did happen. So very difficult to say what's going to happen. I personally, what I'm doing, I'm being very careful, which means I DC now rather just the big cap, like and Bitcoin. When there are great opportunities, we just have, for example, witnessed. But I keep it in my mind that it can even go lower. But if you're waiting for to reach the bottom, you would like to time the market, or you know, when it's vice versa, you would like to time the top. It's impossible. So you have to sell on the way up when you're making profit, and you have to accumulate when you go on the way down. And when the market is more than 50% down, when you're looking at Bitcoin and many altcoins, this is definitely a time to think about it. But I'm not giving here advice, but I would never go all in. I would like to always hold some cash on the side if there are better opportunities. And for example, if we bottom and we go up and we do have this cash on the side, I don't care, because I'm already into the market. That's enough. And when actually there is another great opportunity coming, or for instance, now Bitcoin starts and then, you know, big caps and then small caps, then you can prepare yourself for next investment when situation is getting, you know, stronger, more stable. But what we have right now is it's very weak because of the economy and just what happened with Terra. So it weakened right now the mood of the investors, the willingness to invest in the market. But of course, as you can see, the big whales are still buying, accumulating. Retail is mostly who was scared. Okay, and now the next topic I would like to discuss, it's all about the inflation numbers, the CPI numbers in a couple of big countries, and it's not looking good. But just have a look. So we have heard Jerome Powell from the United States saying that they won't stop with the rate hikes until they really can bring down inflation. Well, we will see how that will work out. But on the other end, there are many other countries. They coming up with the freshest numbers here. And in today's news here on CNBC, you can see that the UK inflation jumped to 40-year high. It's 9%, as food and energy prices spiral. So as you can see, 9% rise on consumer price index, the highest since the record began in 1989, outstriping 8.4 annual rise posted in March, so definitely bigger than that. March, which was back in 1992, and well ahead of 7 seen in March of this year. So, it's a significant increase. You can see it here, how it goes up. Look at this chart. This is just like crazy. This here we're talking about 2016, 18, 2020, August. And here in last year, we have basically started. And since that, look at this increase. This is crazy. This is in the UK. But when we move on to Germany, then you can see that now the new numbers looking better, slightly better than in the UK. But the consumer price index is now 7.4. In March, it was 7.3. February 5. So you can see, look at these numbers. It's always getting bigger and bigger and bigger and bigger and bigger, month by month. So the situation is not getting pretty good. Here we have the US. In the US, it's also, now we have, tiny decrease, because it was 8.5 in March and the April number is now 8.3. But what we expected, at least what that said, was said that 8.1, so it's higher than that, but at least it's not a new all-time high, or it's a new high, not a new monthly high now, month after month. But in other countries, we see pretty bad numbers, and these numbers are already very high, which means that we still have to think and find something, a hedge against inflation. And you do your math and your homework. What you would like to invest. Definitely this channel is crypto related and focused on crypto. Bitcoin could be a hedge against inflation if you agree, but it is very volatile. You have to live with that. But in many years' time, when you think about, zoom out, that's what I mean, then it's always returning to new highs, and therefore this is what the whales are doing. They continuously accumulating when they always do, but at least when the market is down, it could be wise, not that wise, but it could be wise if you're thinking in long term, because if you have it in fiat, then definitely it will inflate. But I always tell you, I'm not all in crypto. I looking at other assets. I always diversify my portfolio, not just in crypto, because you never know what's going to be, the best. But right now, the crypto assets, if you're looking at the last 13 years, looking at Bitcoin, outperforming everything else. Nobody knows the future. Okay. And the next topic I would like to discuss is about the very interesting data that in China, miners still account for 21% of the network hash rate. But isn't, Bitcoin mining banned in China? So let's discuss that. A new report, according to a new report, put it this way, which is made by Cambridge Bitcoin Electric Consumption. It's showed by the Electric Consumption Index. Here you can see it. It's very interesting, the hash rate, what we have. And this yellow big chunk, it used to be China. And then it, the ban happened. And then, it went down to 0. And then we had, other countries. The US obviously came up like significantly. But guess what? Now, China and yellow is back a little bit. And when you're looking at this article, it shows that Covert Chinese Bitcoin miners still account 21% of the network hash rate. So even after last year's Bitcoin mining ban in China, the nation remains second only to US in terms of capacity. And if you go back all the way to September 2020, they had the 67% of all network activity in China. Obviously, that, as I showed you on the graph, it decreased, but now it's a little bit back. So the report suggests that the sizable portion of China Bitcoin miners found ways to adapt to the ban using foreign proxy services to hide mining activity rather than leaving the country. So new CCAF data shows that China accounting for 21% of the hash rate, becoming second only to the US, which is now 38. Well, interesting, isn't it? So how they could manage it, how they can hide, I'm not an expert in this, but this is what the data shows. Okay, guys, that's it for today. Don't forget, if you like this kind of content, smash the like button and also subscribe to this YouTube channel if you would like to get the daily fresh cryptocurrency blockchain news. Tomorrow I'm back with the freshest. I wish you a great day. Have a good one. Bye-bye.